Alrighty, we are officially live and in full effect. We have Gizzy Credit Repair in the house to chop it up with
Yo,
today.
what's up?
Welcome to the Real Estate Rockstar Partnership. We are live.
Thank you.
I'm your host, and my wife here, Heather, is too. Phil Barneo, and of course,
Heather Barnea.
So, you know what? We did a seminar together, right? That's how we met,
Yep.
and we were at an investing seminar, and you were cool. I liked the way that you presented to the audience, and we got to talking. And you know, it's funny. I remember I came up to you. I don't know if you remember this, but I was like, "Hey," and I called you Jizzy. Do you remember that? You were
I
like,
think so.
"Nah,
There's mad
it's
people who call
Gizzy,
me
bro," and I
Jizz.
was like, "Oh, that makes a whole lot more sense." I'm glad, but that was funny. So
No,
my man here.
some
So
people to mess around with me, they say Jizz. I'm like, come on,
yeah,
man.
that's what I was saying. I said, "Oh, it makes a whole lot more sense the way you
It's
said
Gizzy.
it."
It's Gizzy credit.
It's Gizzy.
Oh yeah.
So is that like that's like a nickname?
Yeah, that's my nickname because
Nice.
everybody kills my real name,
What?
Guillermo.
Okay, yeah, I'm not.
So
I can't roll the Spanish. Sorry, but I'm not even trying to. I look Spanish, but I'm Italian. I can't speak
you
it.
look mad. What is it? Spanish guy, like
Yeah, I
Colombian.
get it all the time.
Yeah, yeah.
But
You look even your wife look Colombian. I thought
yeah,
you guys are Latino, Colombian,
yeah,
but
yeah.
you're actually Italian.
I am
Yeah.
actually Italian,
Oh,
so
nice.
yes,
That's what's up.
yes.
That's what's up.
So let's throw some stats out there for the people watching.
That's what's up.
My man right here, 12 years or so, you said, right, in the business, fixing thousands of credit repair reports for people,
Yes.
improving scores.
Oh,
That's
yes.
awesome.
That's a big selling point of ours when people reach out for the service. We say, listen, when can I expect results? And we say, in the last 12 years, close to almost 13,000 customers, this is what we've seen. So
Wow.
when you see that and you know
Yeah.
that you see me online and you see the videos on YouTube and podcasts and the stuff that we do, it's like, all right, these people are are legit, you
Yeah.
know, and more than well, we love helping people. And
Yeah.
plus, not only helping people, but we also help people do it themselves because we have a $99 do-it-yourself credit repair system, and we
Okay.
also have a professional credit repair system. Actually, someone reached out 2 days ago, thanking me, like, "Oh, thank you so much. I never thank you for getting me involved in a business. You changed my life." And it's like when you
No,
get on
that's what.
YouTube and when you get on YouTube and you want to be personable, all you want to do is, just to spark someone to get an idea of, what it may be to be helping people and do good for yourself and help out your family. And that was nice. I told them thank you so much. I had another podcast last week with another person who we introduced to the business, and
Okay.
we sell our templates to teach people how they could do it to others. Oh, he's thankful.
Okay.
He used to be a bus driver for 17 years and been watching our YouTube content for a long time.
Okay.
People become fans of yours,
Yeah.
and you begin to be, even though you don't know, but you and your wife are gonna be these people that people look up to. Like, oh, I want to be like them when I get my stuff together. I want to be like them or present
Yeah.
myself like them.
Yeah.
And now he's successful. He's doing his thing. He had me on his podcast. He thanked me. So it's a blessing, bro.
Yeah,
Yeah.
it is a blessing, and I'm glad you said that because we always talk about the importance of liking the people that you do business with, and we
Yeah.
feel and believe in attracting like-minded people, people who have the heart of a giver and stuff like that. And when what you said just kind of confirms that, and just what we're doing in real estate and everything, especially with what we're building now in EXP, it's all about how we can put ourselves in a better position to really help other people. And at the end of the day, that's what it comes down to in your business. Like we're talking to real estate agents right now, and those agents.
EXP is no joke.
Oh no, exp
Some
is
people
awesome, and
people
we're
people like every other 2 weeks, someone reaches out for a business opportunity for me
send
because they
them
see me
send them our
online.
way, brother. Send them our way.
I get some
um,
people who are like, "Yo, I'm an EXP." I was like, "Come and join us." I was like, "Oh." It's like, when you have little
yeah,
kids, it's
yes,
you
yes.
could just focus on one thing.
Yes. And that's what's awesome about business and enjoying what you do. So, all the agents watching, hopefully you enjoy what you do and hopefully you enjoy helping people find houses and list and sell houses, right? Because that's important.
It's
So, we've
very
got
tough.
some
It's
cool
very
content for you guys today.
correct.
Obviously, if you're an agent, today we're going to talk to you about how you can help your clients to close more deals. If you're watching this and you're not an agent, that's okay too, because if you are interested in improving your own credit score, or you know other people that you might want to help as far as improving their credit score, we're going to give you some cool ideas and tips and resources to be able to do so. Stay tuned until the end because we have some announcement to give you, and then we also have a discount on some services here that we're going to offer you. So let's just jump right into it and give them some content. The first thing I want to talk about is okay, so why are we talking about credit repair, right? Well, when it comes to our clients, as far as realtors and helping them, a realtor, if they understand credit scores a little bit, they should understand loans a little bit and lenders, and we'll have some lenders on, in upcoming episodes. But the more you understand the credit repair, the more you can help your client, right? Be able to qualify for a loan and be able to close more deals. And that's what it comes down to. So how do you close more deals with it, right? What's the purpose here? So lenders, the purpose of a credit score, just to understand like why they're out there, obviously. The credit score is to provide a indication to a lender of whether or not that loan is going to be risky to them, right?
Correct.
So your credit score is a huge factor in determining whether or not you're going to get a loan. It's not the only factor, but it's a huge factor.
Correct.
So when we're talking about real estate agents, wouldn't you say that helping a client be able to bump their credit score up, in especially, let's just talk about this market first. This market is very competitive right now, and FHA loans are very hard to get approved when we're submitting offers. So if a client is looking to make an offer and we can help them bump their credit score up to be approved for a conventional loan, then that's extremely helpful for us as agents to be able to get their loan approved. So I'm pretty sure it's around the 620, right? Do you know on that one? I think it's
Yeah,
620
620,
for conventional.
620, 620. No, conventional it could be 680, 700, depending on the down payment you're gonna give.
Okay. Okay.
So
We find the stats. But the point is, right, if we can help them get their credit score up so that they can qualify for a conventional loan, then that's really going to help real estate agents be able to be more competitive when they're making offers.
Definitely.
Do you have anything to add on that?
Yeah. So I talked to somebody today, actually, a friend of ours that's going to start looking for a home, and they were convinced that FHA was the way to go because their lender said, "Oh, it's low money down, and you'll have no problem. FHA is widely accepted." But then he called me, and I'm like, we always look out for a buyer's best interest, obviously, right? And then this person being a friend of mine, I can speak very candidly, and I said, "You're not even going to be looked at right now in this market. Like, there's going to be 7 conventional offers, and there's going to be 1 FHA, and they're going to take it and they're going to throw it off the table. And it's going to be, amongst the conventional." And the only reason for that is that conventional people typically have higher credit score. They have, a higher down payment, whatever the case may be.
There's no inspection. There's no additional inspection that you get with FHA.
Yeah.
And let's be realistic.
it's a lot of hand holding.
A lot of hand, yeah. And and it's not discrimination in this case. It is discrimination. It's fair. It's fair because what it is you're basically judging offers by their strength, and you're saying, hey, look, a conventional offer typically is going to be a stronger offer than an FHA offer. So we want to try to help as many clients as we can get their loans up to the conventional level, especially in this market. In other markets, it's a lot easier to get an FHA offer accepted. In this market, it's much more difficult. So let's get into understanding just a little bit about what it is that affects your credit score. You could probably weigh in here and help people understand, like, what are the major factors that affect your score? What do you guys like when you're trying to increase it? Like, obviously you're attacking certain things. What is it?
Well, yeah, one of the main things that we see when we look at the credit monitoring is the debt to income ratio on the credit report, which is the revolving credit card accounts, if they are maxed out or not. So that's how people can manipulate their credit scores by themselves, is if they find themselves maxed out on a credit card. Maxed out meaning could be 80, 90% to the limit.
So
Or
like
let's say if it's a $10,000 credit card, they owe 8,500. That's like maxed out. Like, it's
yeah,
tough. You know, I
yeah,
just spoke to a customer today. I used to do CrossFit with him. He used to be my coach, and he's $30,000 in debt. And he's like,
yeah,
"Oh, my credit score was 7 something, and now it's 5 something. I had a couple of late payments." Well, listen, if you're only making the minimum payment on that type of debt, you're
yeah,
probably $600, $700, depending on the interest rate that you're paying into. And then if the interest rate is like, if you send $500, 250 or 300 goes towards interest, and then you only got 200 go towards the principal to bring that debt down, that's where
yeah,
you're gonna find yourself in a tough situation where
yeah,
you're
yeah.
gonna maybe start doing Uber or start doing other
Yeah,
things.
so
More
so
income.
the credit usage is what you're talking about, right?
The credit
So if
usage,
you have a
yes.
line of credit on, and that's one of the things that are on the report. So it's an accumulation of all of your credit cards and available credit. And
Correct. Now
so you want to keep that ratio low,
you want
right?
to keep
So
it anywhere from 10 to 20% of the credit utilization. Once it reaches 37%, you begin to see a little, going down a little bit with the credit scores. Not that you're going to have bad credit, but like I tell people, once we fix your credit, what are my credit scores going to be? It all depends on your revolving credit card accounts. If you're maxed out, you could be anywhere from 690 to 715 credit score. If you're not maxed out, if you owe 10 to
okay,
20%, 3 to 10%, then you could be over 730, 740 credit scores.
right,
But
right.
the big manipulating
That's the
factor,
one thing though, and let me know if I'm wrong because I'll hire you right now. But if you don't take care of their debt for them, do you?
no, we don't take care of their debt.
You don't pay
We
their
are,
debt down for
no,
them?
no, no,
No, all
no,
right.
that's,
I
that's not.
could have got you. I could have got you a lot of clients if you said yes right
Well,
there.
that's the thing. If you do owe your taxes,
Yeah.
and you don't know how to negotiate with the IRS, we help people in doing that.
Okay.
So we've helped a lot of people, restructure their IRS debt. Of course, we charge a fee for it. We help people, restructure their student loans debt too. Now, that's one thing
Okay.
about
So you're talking
your
about consolidation there, kind of.
consolidation negotiating, so you could be
Okay.
more comfortable with a payment. But even you could do it. People who haven't paid their student loans, who like right now, our Lord and Savior, Brandon, Brandon.
I-
Let's go,
let's
Brandon.
go. Yeah, I do. Yeah. Yeah. My son is actually named Brandon, but yes.
Oh, for real?
That's why I was like, where's he going with that?
What a name to have during these
Yeah.
times.
Yeah.
Yeah.
Anyways,
That's funny.
Joe Biden just
Yeah.
said that, your student loans, you need to start paying them back.
Okay.
And that's the whole thing, is that it's trillions of dollars in student loan debt. Like,
Okay.
people progressives who think that, student loans are just going to go away, that, oh man, Biden was going to do something that is totally wrong.
So
But
that might be pretty applicable to maybe some first time home buyers, right? Who are typically be in that scenario where they have some debt. And on that, let me ask you something too, because I think a lot of people, it just came as a thought. Where do you recommend that people go to help them monitor their credit and see the report so that they can get a better understanding of what that file looks like and kind of communicate with you? Do you have any advice on a service?
it all depends on people's money situation, during the month, because the best one out there is myfico.com.
MyFICO?
Yeah,
MyFICO.com. Okay.
correct. But they charge you $42 to order a new report every 30 days. So they're the most
Okay.
expensive, because they're like the best ones. But what you don't want to go is to Credit Karma,
Okay.
or someone who's like Vantage Score, all these credit monitoring sites, which is a great question that
They
you
don't give
have.
you a true FICO.
No, there is no true FICO. The only true FICO is when a mortgage lender runs your credit, a vehicle loan runs your credit, or a credit card company runs your credit. Those are your
Okay.
true scores. Now, your FICO is the middle score of the three when you go and get a mortgage. But that's a big
Yeah.
misconception is
I've
people.
used and I don't know, you might be familiar. I've used True Credit. I think it's called TrueCredit.com.
Mhm.
They provide a FICO score for me, and they give me all three reports. I think I pay like 20 something bucks a month for
Yeah,
it.
normally it'll be $27 to $30 or
Yeah.
$29.99. I help people, we go by Identity IQ, like we're an affiliate with them. So we tell people go to Identity IQ, send me over the login info so that we could review and see your three bureaus. But
Okay.
even them, no credit monitoring is really a true sense of what your scores are. They're going to be off anywhere from 15 to 20 points.
Okay.
But Credit Karma is going to be off 40 to 60 points.
So
Okay.
basically what you're saying is Credit Karma is to mortgage lenders, Zillow to realtors.
Credit Karma
Yes.
sucks. That's what we're saying.
Credit
right?
Karma sucks.
Not,
We
not
actually,
that they suck. I mean, it's good for an indication, right? Like, if
But
you're
it's
not real
far
serious about buying a house, look on Zillow.
Well,
They're going
that's
to show
the
you
whole
a bunch
thing.
of houses. If you're not real serious about your credit, get an idea of what it is on Credit Karma. But when
If-
you actually get real, like, you want to make sure that you're using the right service, like a realtor to find your home, or like, a broker can run your FICO.
Correct. If you don't have any negative accounts and if you don't use your credit cards and you want to go by Credit Karma standards, yeah, go ahead, go do it. But if you have negative items and you're using your credit, the credit the way that they come up with their credit scoring model algorithm is not par to like a real mortgage lender running your credit. That's why a lot of people get confused,
Gotcha.
where they could be like, well, I got a 650, at least I could go FHA. But when they come to find out, they're like, oh, it's really a 580 when they run my credit score. So you don't want to
Gotcha.
be in that situation. As a matter of fact, when people start credit repair with us, we recommend that they do not use Credit Karma at all because they confuse you, right? So when
Yeah.
you're in dispute and we send dispute letters to Experian, Equifax, and TransUnion, and even if we dispute online with all three bureaus, Credit Karma uses Equifax and TransUnion, and Equifax is going to lower your credit score on Credit Karma.
Wow.
Until you come off of the dispute, that's when your credit score will normalize and
Okay.
take in the deletions that were.
So let's bring clarity real quick, and this will also bring us back to what we were just discussing. You said dispute. So the other thing that affects your credit score, back to that, those items, so people have clarity here on what it is that truly affects it. You're disputing late payments.
Well, if they dispute late payments or any negative account.
But that's what you're referring to when you say any negative account. What else would you dispute? So late payments affect your credit score. What other things are we referring to that you might dispute?
Collection accounts, charge off accounts, child support if you're late on child support, student loans if you have a bunch of late payments. It's weird, right?
Okay.
If you have one or two late payments in a year, those we could go after those disputes, or we could go after those negative items, whether it's a car loan or credit card or a student loan, even a mortgage. But if it's more than two, it's best we remove the whole account from the credit report, because we're going to be there forever trying to remove, but this is if they are consistent late payments. So if you have a file where January, February, March, you were late, that's going to be tough to remove. We just remove the whole account from your credit report. Yeah.
So you have ways and strategies to do that. Okay, that's good to know.
Yeah, to remove the negative item, because it's like a catch-22 where you're damned if you do, you're damned if you don't. Let's say you have a credit card account and it's an open credit card, but you have late payments and you want to dispute these open credit card payments. Then in that, there's a 5 to 10% chance that the creditor can close your account when you dispute it. So if it's a Capital One card, it's a 50% that they could close your account when it's an open credit card account. Yeah. So see, we tell people these things.
You know all those things, from experience and stuff, obviously.
Yes.
So the other things I'm looking, so my list that I'm looking at right here, credit experience, right? It affects your score a little bit, like and credit variety or diversity, right? So
correct.
How long you've had accounts open and the types of accounts that you have open all play a factor. Probably not as big of a factor as the other two things we just discussed, but
No, but it's still, you want to have an all-around good credit profile with
Yeah,
revolving accounts, which is credit card, installment accounts, could be an auto loan, could be a furniture store, could be student loans, real estate account, which we all know what real estate is, and other accounts like,
yeah,
a line of credit or whatever. But here's the thing about student loans, and if you're late on them, and why we removed them, and also why we get doctors who start the process with us because they owe
a lot.
80 to one hundred
Yeah,
and fifty thousand dollars
yeah.
in student loans, maybe more, and it's all on that they always show maxed out on your credit report. So remember how
Yeah.
I told you revolving credit card accounts where you have a limit and a
Mhm.
balance, and if you get close to the balance to the limit, your
Yeah,
credit score pressures down.
absolutely.
Well, student loans don't work that way. Let's say
Okay.
you owe $10,000 in student loans and you send in a $500 payment, and it's not going to show you owe 10,000. Now you owe 9,500. It will
Okay.
always show you're maxed out at $9,500.
Mm.
So
Okay.
that's why people don't like student loans being on the credit report, because it doesn't give like a balance. Like if you have a car loan, which is an installment account, it'll show you the how much you bought the car for and how much you owe.
Gotcha.
Yep.
If you
Okay.
have a furniture, how much you bought it, how much you owe. The funny thing about people who pay in cars and they say, Gizzy, I only have, $3,000 down more to go towards my payment of my vehicle. And I want to make this other purchase, but I need to have my credit better. Do you think if I pay off the car loan, my credit score is going to go up? Negative. Your credit scores don't go up once you pay off that car loan, because it begins to be a closed account, and only open accounts is
Count.
what generates your credit scores. So when
So
you
you're better off to pay down a credit card or anything like that.
pay it
Not
throughout the
necessarily
life,
a loan off.
pay
Yeah.
it pay the vehicle loan throughout the life of the loan, right?
Yeah.
Because if you pay it off, it'll be closed, and when they do the calculations of credit score, the algorithm is not going to choose that account because it's a closed account. So
Right.
that's why your credit scores go down,
Right.
and then
Okay.
eventually they go back up. But just
Okay.
like when you this is why the one thing I tell real estate investors and mortgage people and realtors, the worst thing your customer could do is buy a vehicle prior to going and closing on that home.
Oh, you don't have to tell us about
Correct.
stuff like that.
Yeah, so
That's like strangulation mode, right? You
Well,
thought that it would be a good idea. I didn't mean to cut you off, but to go buy a car right before you close on your mortgage. And
I just
sure you got a
I just
story.
said this to I was representing the seller and we're looking over offers, right? Because we had several on the table. And there was one that came in at a really, really good number. And, of course, my seller's looking at me like, I want that amount for my house. And I'm looking at it going, well, hold on a second, because I knew it was a low down payment. I knew the type of financing, and I'm versed in, evaluating the strength of the offers. I said, I know the number looks fantastic, but this person doesn't have a lot of money that they're putting down. So they could go out and buy a Mercedes, for Christmas, and they're not going to be able to close on your house. So that's the risk. So coming full circle back to real estate, that's how it helps realtors be able to evaluate the offers. Because if we see, 3% down or no money down or things like that, it's not that you're judging the person and their financial capability, but you're just evaluating and telling your seller the strength of the offer on the table.
correct. And you said it really nice and professionally and really nice. You were nice to that customer, because we tell people, which you should say to your customer too, is when you go and purchase a vehicle prior to getting a home, or you're thinking, I'm going to get this vehicle first, and 3 months later, I want to go and qualify. Having a $30,000 vehicle showing on your credit report takes away approximate or almost an estimate around $170,000 worth of buying power.
Oh,
because they calculate that
that
amount that you're paying could be $450, $500, $502,
Pretty
and the way
yeah,
correct. And that's going to take away and now these loans, these car loans, go 6 years.
Yeah. And you just tell them, my mother would have said, she would have slapped me upside the head. She would have said, hey, Stunad, what are you doing? Why would you make a purchase like that? Right.
Correct.
I mean, we could say it another way too. Like, did you smoke your medical marijuana before you
Yeah.
went and bought that car? When you know that you have a closing coming up, you got to leave the chips,
And
where
a
they
lot of
are
times
until you close.
we could get some bougie customers, and we could get
Yeah,
some ghetto customers where, they're not going to, they want to look like they have it. But I
yeah.
tell customers all the time, yo, listen, you could just go and get a hoopty, $2,500, $3,000 vehicle, drive it for 6 months, and then I'm promising you, once you get what, a 680, 700 credit score, you close on this house. The next thing you do, like customers who contact me, once we, because we tell people, once we fix your credit, I'll make sure you send me a picture so that you let me know that you close on the house. They always send a picture with the new car they finance.
There you go.
Because it's like that's the right way to do
Yeah,
it,
yeah.
and plus you want to be as far as positioning people, because we get people who always just want to get that sell and put people in a home
Right.
and not think of the customer afterwards. Like,
Yeah.
bro, look at your credit. I mean, you just want the house. All right, cool. Let me just make this quick cash, close this loan ASAP. But
Sure.
you should, tell people, listen, once you get this house and you're working on your credit, you get the house, then you can go and finance your furniture. You could go and finance at a better rate, because, we've spoken to customers and we gotten people to be in position to purchase homes, and they were paying 15.99% on a vehicle loan. Once we fixed their credit, they were able to refinance out of that loan and pay 4.9%,
Right.
saving thousands of dollars. I think it was a calculation I made to almost $13,000. If they were to pay throughout the life of the loan that 15% interest rate, they
Wow.
were going to pay, because it was two vehicles, and they were paying
Yeah.
15% on both. So it was
Yeah.
like $13,000 more than what you bought the car for. Bro, don't do that.
Wow. Don't do it. Don't
Yeah,
do it.
yeah. So I have a question,
Yeah.
unless you want to go.
No, good.
So what would you say to the buyer that is watching this video or will watch this video that is looking to purchase a home in the next, let's say, 3 to 4 months? What would your advice be? What are things that they can work on to prep for the home buying process?
It's normally people come to us for credit repair anywhere from 3 to 4 months prior to them wanting to do something with their credit, whether
Okay.
it's a home, a car, or get some new credit cards. So what happens is we tell people, make your payments on everything that you're doing right now. If you have extra money coming in and you do think that you're going to put $10,000 down payment on all these things, but you're 40% your credit utilization, your DTI on your credit cards is 40%, I would tell the customer to bring that debt down to like 20% at least, so
Okay.
that their credit scores could raise up. The best way that people could manipulate their credit scores is by paying down that credit card debt. And
Can
like
I
I
ask you
said,
a question on that note?
sure.
So the usage, or the do they call it a debt to income on the credit card score?
Yeah.
So it can they actually increase their credit too? Like, can they open another card that would actually lower it without even making a payment, would lower the you understand what I'm saying? So let's say they had $10,000 in credit and they owed $4,000, so they were at the 40%, like you said. Can they open another $5,000 card? Now they have a $15,000 credit limit, right? And they still only have $4,000. Would that automatically lower their
Well, that would be an inquiry, right? In order for them to go and try and get new credit. And they
Okay.
may or may not get that because they are showing that they have debt,
Mm-hmm.
and the credit score may not be the best.
Okay.
So in that case, if they're a married couple and one of them has better credit than the other, I would say to add the one that has good
There
credit,
you go.
add
That's
that
the
person
strategy. I knew you had a
as an
strategy.
authorized user. Yeah,
Yeah.
you add them as an authorized user on credit cards that you may not use. Now, right now, you don't
Mhm.
want to use consumer credit cards, or what do you call it? Merchant. These what do you call this? Bloomingdale's,
Like a
Macy's,
store.
Like
Yeah,
a
yeah.
store retail card.
don't get any retail cards, because
Okay.
they come
Okay.
with a very high interest rate. Only if you know that you're gonna pay that off in the next 30 days, that's when you say, okay, let me get that card. But even that, I wouldn't get it. I would only go after bank cards.
So in this case, this strategy, because let's just hypothetically say right here we're talking about trying to get somebody over the hump to be able to get the conventional financing, right? And they need to bump their score up a little bit. Their report's not all jacked up. They don't have a horrible, but they just need to get up a little bit. So what we're saying here is if they can basically have somebody co-sign with them, is that kind of where
No,
not co-sign? So
no, you don't want to use cosign because
Okay.
cosign has a negative feel
Okay.
to it, because they feel like they're gonna use their credit.
So it's like a joint card.
It's not even a joint card. You don't want to use joint either,
What
because
if
joint
they-
indicates that they're both in this together. No, you want to be an authorized user.
An
Now, authorized user, the way that you word it may seem like, oh, I'm authorizing to use your credit card, but that's not it.
So
What happens is,
so the other person's giving them authorization to utilize their credit, basically their card.
that okay. In reality, yes, that is true. But for you who wants that credit score increase, you don't want to use their credit.
No,
you
I
just
know.
you just
they gotta trust you.
correct. They gotta trust you, and all you want to do, it doesn't matter if they trust you though, because even if you don't live close to this person who's going to add you as an authorized user, that credit card, when you get added, the credit card doesn't go to you. The credit card goes to the person.
Okay.
And they have to be the ones to send it and give it to you.
Okay.
Sure.
But what they do is they open a card. It says your name. They approve it, or they open it, so that it could be used, but they don't give it to you. They just keep it for themselves.
Yeah.
But that information that is on their credit report, that they have a 5-year-old $6,000 credit card and they don't owe nothing on it, transfers over to your credit report file, boosting your credit scores. Because now, like you said, if you're 40% of the utilization and you add a new credit card in there, authorized user that has no debt, that's going to definitely bring down your DTI.
So you heard it right here on Rockstar Partnership from my man Gizzy. You just got a credit hack, how to instantly boost your credit. We don't know exactly how much, depending on the limit and stuff like that, but to get you over the hump and to give you an instant boost, you could do that and become an authorized user on someone's card and instantly boost your credit.
Yeah. Now you could ask your friends, you can ask your significant other. Some people don't like, telling their business or whatever. But hey, listen, if you just need a boost and you know someone, even offer to give them money. I mean, you're not supposed to, but
it's gonna get to the house.
but yeah, just be like, yo, I was,
I have another question for you.
Go ahead.
So what would you say the percentage of customers that you get that come to you that should have come to you 3 months ago? Like, does it pay to have a plan of action and, go through all of these steps prior to searching for a home? In my experience as a realtor with clients, I think my answer would be 100%. But I'm just curious, like, what's your experience as a lender and issuing these mortgages and helping people do the repair? Like, do you find that they should have started the process 3 months before they started searching for homes?
Well,
like,
we're not lenders, but we position people, or we pre-qualify people prior to them going to go to the lender, because we know if they're gonna be approved or not. So what happens is, you said prior to them coming to you, is that what it is?
The earlier they should start, the earlier the better, right?
Well, when you were a little bit more heavy, right, Phil? You wanted to lose weight ASAP.
Yeah, there you go. Good example.
Right? You wanted to lose weight. You only want it when you need it.
Yeah.
Right.
Yeah.
Right. Okay.
That's true.
And people are like that in this business. That's why it's so hard for me to sell on this, because I could sell you on the benefits of getting your credit fixed, but you're not gonna take it. You're only gonna take it when you find yourself, oh, I can't get an apartment because I got this, or I can't get a new credit card because I got this. So the earlier you start, which is great when I get customers like that, because I know that this customer is going to be patient with the process to fix their credit, because it could take time. It doesn't happen overnight.
So let's talk about that. What is, as we wrap this up and stuff, what is like an expected time frame that somebody should expect? Now, I'm assuming that's going to be relevant to how low their score is and how many negative inquiries or not inquiries, but negative
Items, negative items.
items and are on the report. But do you have like something that you can give people as far as a range, that kind of weigh in on what they could expect if they were just a little bit or if they had like really bad credit?
Well, in the last, 12 years, like I said, close to 13,000 customers, we tell people that in anywhere from 3 to 4 months, they're going to see aggressive results. When we dispute online the first 30 days, we kind of get the feel out of how long the process is going to take. So sometimes we've been able to remove everything from one bureau in the first 30 days. So let's say 80 to 90% gets removed from one bureau in the first 30 days, right?
Mm-hmm.
But then the second, the Experian or TransUnion, they may remove 50 to 70% of the negative items. And then Experian, which is the hardest bureau or the toughest, it could be either of the three that could be tough. But for us, it could be Experian, even though have gotten fast results for Experian. But just for the sake of just telling you that
Yeah.
Experian is the hardest, okay, cool. Experian is the hardest. And if we remove 40 to 60%, so we know that Experian is going to take longer to remove everything from each bureau.
Okay.
We know that TransUnion may take a couple of more disputes, and we know that the one that we only got 10% more left to remove, we know that it could probably take one more or two more disputes in order to remove everything from that bureau. So that's why we tell people anywhere from 3 to 4 months, you want to be in position to do what you want to do, give or take. It could take 2 months. It could take 6 months. It doesn't matter. When you work with us,
could be more. Yeah.
it could correct. And you have to be honest with the customer. We especially as a realtor, if you're going to be referring someone, just stay on top of them. Hey, what's going on with their credit? I had a customer in California reach out, asking about the customer that they referred, but the customer is not the one that really communicates with us. So the customer has been involved with us for 3 months, but we've only spoken to her by email probably twice. You don't want to do that. The customer needs to be involved in the process to know what's going on, monitor their credit to see what changes it has in the last 30 days to see where they could be at. Correct.
Yeah. I mean, going back to the weight loss, if you're working out, you're doing your thing and you don't see nothing, right? Because you haven't looked.
Correct.
You're probably not going to keep doing it. You're not going to be motivated. So yeah, you definitely want to be actively involved. So if I'm hearing you correctly, what people could kind of expect is in the range of like 3 to 4 months, if your credit is, not severely, damaged, then you can see pretty significant results that could definitely put you in a position to be qualified for a loan and stuff,
or more qualified.
or more qualified. And maybe if your credit is a little bit more severe, you're going to see significant improvement in the 3 to 4 months, but it might take a little bit longer to really get you up to the 680 plus mark, and like where it would be. Is that fair enough?
No, that's definitely fair enough. And you want to set the right expectations for the customer, because they're going to be looking at you for questions. They're going to be looking at you for what to do afterwards. And you as a realtor and a real estate investor, you got to know a little bit about everything nowadays. In order to separate yourself from someone else, doing these podcasts, of course, people want to like you and trust you and want to do business with you. So definitely the more you are involved in it, the better it's going to be.
Yeah. Awesome. Definitely. And so as we're coming up to closing here, why don't you tell us, so that everybody watching, the realtors watching who, want to have a little bit better understanding of what it is that you offer, and some of the people that are watching that are not realtors who are interested in improving their score. So you guys do a lot of work, obviously some of which you just mentioned, disputing things and this and that. And you do all of these things behind the scenes, and obviously there's a fee involved, right? Correct. So help us understand a lot of that, like just some of the things that you do as far as being able, that the work that you're putting in to get the credit scores up and the reports cleaned up. And then talk to us about how it is that you, because not everybody's the same. So cost wise, it could be a little bit different, right? So kind of just let us know what you do, and then how the costs come into play when it comes to, giving that estimate to people.
Sure. So we like to review the credit report through credit monitoring to be able to see the three bureaus and be able to find out how many negative accounts you have per bureau, including inquiries, including, which is imperative that we dispute, is all of your names, your addresses, um, your phone numbers, where you worked at, and all that stuff. That's all gonna get fixed. That's all. You only need to show on your credit report one name, one date of birth, one address, and that's it. When you go and apply, that's when you go and you give them where you work at, the phone numbers, and all that stuff. And that's how it all shows up onto your credit report. So, just understand that when we do work on the credit, we're going to fix all of that, and at the same time fix and remove all those negative items that you have on your credit report. So what happens is we've always charged a one-time fee, and just recently we came out with a 6-month program. So the 6-month program, it's $4.99 upfront and $99 a month after. So the first month is $4.99, and then for the next 5 months is $99. So
Okay.
that comes to about $1,000 per se for your credit for
Okay.
6 months.
Which
But
is a pretty good deal if I just might say $1,000 to get your credit repaired. I think is a phenomenal deal, especially considering how much money that's going to save you as you start to wrap your credit together. I mean, it pays for itself, but there's
correct.
another option.
Well, the one-time fee is the option,
Yeah.
and we commit to the file until everything is removed for that
Okay.
one-time fee. So if we charge you 1,500, like I got a customer, I charge 1,500. He's going to pay a one-time fee, but that's it. It's going to be a one-time fee. Now, if the customer just wants to see what we could do in 6 months, then that customer, that's $1,500. He said, "Well, I just want to do the 6-month program, but we're only going to work on the credit for 6 months." So
Gotcha.
you don't want to do that. If you you want a customer to be fully committed to you, so just pay the one-time fee. We commit to the file until everything is removed. Now, well, I'm not going to allow you to go and speak to anyone about your credit, because you just paid us to be your credit expert. You just
Yeah.
paid us to tell you, how can I get a business loan, how can I get a new credit card, how can I get a mortgage loan. You discuss it with us because you paid your fee for us to educate you and let you know what to do and how to do it, so that you don't go and get a whole bunch of inquiries or
Right.
get denied, or go to a auto dealer that's going to run 15 inquiries and you still going to be leaving without a car. No, we don't want
Right.
to do that.
Right.
You want to discuss it with us, because more than likely we're going to tell you where to go so you can get a better rate, and more importantly, where to go that you're going to get approved for.
Right.
So yeah,
And you are actually going to offer our Rockstar partner listeners a bit of a discount. So
correct.
if they come to you and they
And they
reach out,
mentioned,
the realtors reach out, anybody who's watching this or watches it after the live broadcast, if you're interested in the services, just mention Rockstar Partnership, and you'll end up taking care of them.
yeah. We always take care of people who are referred to us. Even if you're a customer and you refer
Yeah.
someone, we give that customer a discount, just for you to say thank you to the person who referred you. But even Rockstar Partnership, definitely we love helping people who are on the up and up. Just be patient with the process. Things don't happen overnight. If you're into real estate investing, and you're into being a realtor or a mortgage loan officer, anything that you want, just be patient. We're here to help. We're not going anywhere. We want to let you know how things get done, and so that it could be an ease for you to learn how to do things.
Yeah. And I just on that note, I want to say thank you so much. The information and everything that you provided, I think, is very useful, very helpful. I think people got some tips and tricks that they can just even utilize on their own right now from this. You definitely got, what do you call that? A nice little hack before that maybe you can use. But I think at any
There's a lot more that we could
there's a
get
lot more,
into,
but
and
that's
we could
why
probably do
you're the
this again.
expert.
We
Yeah.
could probably do this again,
Yeah.
in some time, and go into the myths of
Yeah.
credit repair, of
Yeah.
the myths that are out there, people who are not educated.
We will definitely do it again and have some
Yeah,
fun chopping it up.
because
with some things
having
like
a
that.
conversation like this, I'm telling you, we do our podcast, and our podcast has gone 2.5 hours, close to 3 hours.
Wow.
Explaining to people. People
Keep
have
going.
questions, we answer them.
Yeah.
But yeah, I would advise people, I'll give you a link.
That's another idea we could do too. I like the Q&A and stuff. We could consider doing something like that. But
Yeah.
I mean, even I think that just from going through this podcast or this, I'm sorry, live with you, I think that people are a lot more educated and have a little bit of a better understanding, after this.
Oh yeah,
And
not a
so
problem.
if they want to reach out to you, we're going to provide information in the comments and things like that. What's your website? We might as well spit it right now for them.
GizzyCredit.com, not
Gizzy.
not Jizzy.
Yeah.
Not Jizz Credit.
Okay, we'll put that in the comments just to make sure that nobody messes that up. I got 2 announcements for you guys before we let you go. Number one is we are super, super, super excited about this for real estate agents. Now, I'm talking to you if you have not cracked the 6-figure a year mark. So if you right now are a real estate agent and you are not making $100,000 in 1 year, then I want you to listen up. We just launched with partners a guarantee. We have a training program, and this program, if you go through it, if you follow the training and you do the assignments and stuff in there, we guarantee that you're going to earn a 6-figure year. You're going to make $100,000 in a 12-month calendar, or we are going to pay you the difference. So that is something that I don't think anybody else has ever offered. So if that's you, you want to go to sixfigurepromise.com. Just go to www.6, that is not the number, but the spelled out word 6, figurepromise.com. So that is an awesome new program that we have. I'm super excited for you if that's you. We have limited spots for that program, though. We're not just offering it to anybody. You have to be serious. You cannot be lazy. It doesn't work that way. Nobody who's lazy makes $100,000 a year. But if you are struggling and you want to be a successful agent earning a 6-figure income, go to sixfigurepromise.com and reach out, and we will definitely get on a call or a Zoom with you and help you understand more, give you clarity about the program. The second announcement we have is based off of that too. If you like what you're watching, if you like what you're hearing, if you just like us because you think we're cool, and you want to be able to do some more business with us, we invite you to go to partnerwithrockstars.com. We are building a big EXP organization. We are excited about what we have going on. We have a ton of different information and things that we can share with you as to why we can help you be successful and level up your business. We're going into a new year, and I always take the time at the end of the year. I think it's like, it's good to kind of evaluate where you are. If you're kind of stuck in the same, rut, the same situation, who is it? Albert Einstein, I think, that said the definition of insanity is doing the same thing over and over, expecting a different result. If that's you, or if you're just, open to understanding that there might be a different or better way to do real estate, I would definitely encourage you go check out partnerwithrockstars.com, and you can learn more about what we're doing within our organization and how we're growing and helping EXP, a fantastic company, break records and just pretty much kick butt. I'll just say butt right now, but
yeah.
So on that note, we've got credit repair for you. We've got some opportunities that we just gave you. We're going to sign off right now, and we're going to wish you guys the rest of the night be a blessed one. And so with that, peace out. God bless you. And we will see you on another episode of Rockstar Partnership. And we'll definitely have my man Gizzy back on at some point to chop it up and have a little fun. And I'm definitely going to try to make my background look as cool as yours. I feel like I said before, I want to come over there and chill with you. And
just go to Home Goods, bro. That's what you gotta do.
Very good. Take care, guys. We love you all. God bless.